Hello. What do I got? I got 70 on here. Oh, why am I echoing? Oh, shit. I think I know what I did here. How about now? Okay. I had me on another tab. How's everybody doing? So I'm really glad I did this. I didn't know what we would hear during this fireside chat with Ocular, but it was well worth doing a YouTube after because we got a lot of really good things out of this 30 minutes. I have to say, I was pretty nervous going into this, considering I have such a big position in this. Um, I didn't know what the benefit is of Anthony doing a fireside chat 2 days before they released the 12-month data. And I didn't know what the benefit was doing a fireside chat this close to signing a partner. So both of those things scared me a little bit. Just for some background, I believe Ocular has had the 12-month data since the last week of February. Yes, that's right. They've had it for that long. And I arrive at that pretty straightforward. I look to see when they presented the 7-month data, which was the third week of September. And all that I did was add 5 months to that, and you get to the last week of February. October, November, December, January, February. And that's when they presented the 7-month data. So that means by the end of February, they could have presented it. And just to confirm that this is true, when they did the 10-month data, it was the data cutoff was like the first week of December. So it would have been like the first week of February for the data cutoff of the 12-month data. So in the worst case scenario, they had the data by the end of March. And now we're sitting here at the beginning of June. So they've had this data. Anthony has been telegraphing us, truly, he's right, even before they had it, that they expected disease reactivation by 12 months in many of these patients. And I think it's safe to say when we see this data on Saturday, we are going to see disease reactivation, maybe in the majority of the patients. And Anthony is not spinning this. That is good news. He's absolutely right. The problem with the way this trial was set up, it was a very well-designed trial. But in my opinion, the biggest problem with it is that you were giving the control group shots every 2 months while you weren't giving shots to the drug, the TKI group, of course. But you did not know for sure that the patients in either of those groups needed those shots every 2 months or longer periods. Yes, they came in with active disease and they were all followed for like a year before they entered the trial. So they did have a history of knowing that all these patients were regularly getting injections, which is very important. They weren't getting injections unless they were declining, functionally and clinically. But still, a skeptic would say that since it was a small trial, I am the king of small n's for those of you that know me going back a decade ago. With a small n trial, it is possible that the people that were on the drug arm just don't have a late enough stage of wet AMD to need regular injections of anti-VEGF. If the drug works as it's designed to do, it is very straightforward. The insert dissolves sometime around month 9 or month 10, and there is 1 to 2 months left of drug that remains in the eye, and it fully resolves itself sometime between month 10 and month 12. Now, it doesn't mean to like the day, you need another shot, but you should have by the month 12 visit, I would think over half of the patients wanting or needing a rescue. It's safe to say from what Anthony is telling us, that is what is going to happen. Okay. And it's also safe to say that that's good news. It can't, if there's no drug in the eye, it shouldn't be working. And if it is working, then that means they don't have active disease. It's pretty much that simple, okay? So that was interesting. The part that really blew my mind, I'm just going to jump all over the place, I was taking notes, was that we did get some news here. In the last 4 weeks, apparently, it seems like the company is moving away from the possibility of doing a superiority wet AMD trial. In the past, just to remind you, a month ago, the FDA was open to them doing this head-to-head superiority trial with just 2 arms, not 3. And if you don't know what I'm talking about, then you should be reading and listening to all the conference calls. But the idea behind this was that it's much cheaper to do it with 2 arms. And because you're proving superiority, which is a higher bar than non-inferiority, you could have a smaller number of patients and a different kind of endpoint. Basically, a 15-letter change in vision. And he learned, I guess, in the last 4 weeks that it would be unethical to run that kind of trial in America because if you have, a 15-letter loss, you have permanent eye damage, is what I think he's alluding to. You can't get that back. I guess, you want to do a rescue. To put another way, you always want to do a rescue if you have less than 15-letter loss, maybe a 10-letter loss or a 5-letter loss, you do a rescue. I don't know what the threshold is. He said it's still possible to do that internationally, but not in the US. He sounded like it was very strong to me that he was saying that the odds of doing a superiority trial have decreased significantly, which means you're left just with a wet AMD inferiority trial that costs $300 million. Just to remind you, ocular market cap right now is $500 million. Okay. And they have $60 million of cash as of June 30th. Okay. And a NDA in wet AMD would not be submitted until probably 2026. If they start enrolling in Q3, it takes maybe a full year to enroll, maybe longer, and then a year to run the trial. So you're looking to just submit the NDA at the earliest, Jan 2026. That's 10 quarters. The company burns $20 million a quarter. Okay, that's $200 million they need for cash burn, plus $300 million to run the trial. 200 plus 300 is $500 million. They have $60 million. Okay, they can't raise $460 million. And Anthony has been very clear that whatever path they take going forward, they will be fully funded to NDA. Of the 3 paths, they were wet AMD inferiority, $300 million, wet AMD superiority, $80 to $100 million, which he basically just said is off the table, and diabetic retinopathy, which would be about $100 million. And that could not start until at least at the earliest Q1, but probably more likely Q3 of next year. Because in Q1 of next year, you're going to get the 6-month interim data of the trial that they just fully enrolled. And you might not know how well the drug's working at 6 months, because diabetic retinopathy is a much slower moving disease. And if they are going to test it with a single injection versus a VEGF on day 1, 6 months later, you might not see massive degradation on the control side. This is just me speaking. No one's told me this, but this is what I believe. You should definitely see it by month 12. So it's unclear if 6-month interim data in diabetic retinopathy would be enough for them to launch that trial. So let's take a pause there. You talked about partners, and the partner language was incredibly strong. His exact lines were, they opened a data room. It's causing us sleepless nights and endless questions. Squadrons of people coming in and out, and we have one guy doing 5 things. The non-inferiority pathway is really attractive to strategics, okay? Then, at the end of the call, and I'll wrap this all around. At the end of the call, he talks about Dextenza and about getting a code change in Dextenza that could really boost Dextenza. I believe that code change would happen in November. Okay. He then says we have to do something before that because we should be in pivotal trials for TKI by then. That, my friends, was a giant tell because you had three paths. One was wet AMD inferiority. You need a partner. You need $420 million right now to do that. The second path was wet AMD superiority. Don't need a partner, or he said in the past they can try to raise non-dilutive or minimally dilutive funds for that trial. He basically just said that's off the table now. And the third path is diabetic retinopathy, which he could do on his own, but that can't launch until Q1 at the earliest, more likely Q3 of next year. The only way TKI can be in pivotal trials by November of 2023 is wet AMD inferiority. And you need $440 million to do that versus the $500 million market cap they have right now. That, my friends, is a tell. And they are far enough along in these talks to where if they were not going to get to the finish line there, two things would have happened on this fireside that happened in every fireside before, and he did not say them this time. One, he did not use the phrase "go it alone" once. He didn't say we could do diabetic retinopathy or wet AMD superiority alone with minimal or non-dilutive financing. He just didn't bring it up. Two, what was the second one? Oh, I mean, two, he's not backing down from, the partnership language. He even said at the beginning of the call, discussing who Ocular Therapeutix is, he says, we have a deep pipeline, some products we wouldn't commercialize ourselves. That's how he started it. Okay. And somebody asked me on Twitter if it's bad news that he said that the partners will find the 12-month data very important to their decision, and if that means they're not close. I think that the partners have had access to the 12-month data in the data room under NDA for 2 months. I could be wrong. I think it's extremely likely they have the 12-month data. Okay. The only rule behind these conferences is that they're embargoed, for scientific publishing purposes to the masses. You obviously could share them with, if you were doing an M&A, process, and you had access to material data for your company, you don't have to wait until you present it at a conference to show that to strategics. So I do think that the strategics have it already. And I do think that we are within weeks of this being over. Now, will it happen by next Friday, June OpEx? Not likely, right? Most of my calls are June 6 calls. I think the stock's going to be higher after this data this weekend. I think there is a chance, albeit a small one, that we get a partnership around the time that we get the data. To me, it would line up. They're doing a conference call on Monday morning already. They could PR the partnership that morning and then do the conference call. I keep asking myself how we can get hurt here. And again, the only way that we ever could have got hurt was a massively dilutive fundraising to go it alone. And it's mathematically impossible, right? They're not going to raise $40 million at $4. That's why I asked him that, and he told me that would not be characterized as minimally dilutive, So it's just not feasible. I don't know how you can be this far along in a data room without either multiple partners still interested, or they have term sheets that they like already. And they just have to decide how to get to the end of those term sheets. They're way past the point of, multiple rounds of term sheet trading. My guess is they started getting term sheets in April, which is 2 or 3 months after they got the 10-month data. And just to walk you through again how significant this drug could be for a pharmaceutical company, just on the wet AMD side, if you assume this drug can do, I think it could do $5 billion in sales in wet AMD. And you put a 5 multiple on that, it's a $25 billion valuation in wet AMD alone. Okay. And if you put a 25% chance of that happening, you get to 7 times 4 is 28. 6 times 4 is 24. We'll go with 6 billion. It's like 6.25 billion. Not discounted. We'll go with 6 billion with a 25% probability of it happening. Probability of success, POS. Okay, 6 billion. Discount that in half for time value of money. That's 3 billion. I just got to a $3 billion NPV for this drug for wet AMD alone. Cut that in half again if you want. That's 1.5 billion. Okay, they have to spend 300 million on trial. So that's 1.5 turns into 1.2 billion. And they have 1.2 billion left to play with that can go to ocular. And they still have a very, very positive NPV situation here, given the fact they only put a 25% probability of success on the whole thing working. It's a lot of money. Whatever deal they sign, I would be shocked if it's for, a small upfront. I think Anthony's sitting on a gold mine. And I think that's why he's talking like such. And it's not me believing him. Dispute the math. You can see what the wet AMD market's like and what the leaders in the market are making. The drug that just launched that allows you to treat once every 4 months, I believe is currently on a run rate of $2 billion in sales. I think it launched like a year ago. 2 billion every 4 months. This will be an every 8 to 10 month injection. It should take over the entire market, which is just bananas. And then you're not even talking about diabetic retinopathy, because I'm sure any partner that signs on for wet AMD will want an option for diabetic retinopathy, which has a similar market size since there's no competition there. So, how does it play out? It could play out all in the next week. We could get the data on Saturday and we get a partnership over the weekend, or we get it on Monday. That wouldn't surprise me at all. They're not in merger discussions. So Anthony didn't give anything away at this Fireside that would preclude a deal happening imminently, right? He basically reiterated all the things he did 4 weeks ago, but had even stronger language. He wasn't even bluffing anymore. In the previous Firesides, he said, look, we want to partner. Do we have to partner? No, we don't have to partner. We just think this is a good time to do it. And then he threw out a bunch of different ways he said they could go it alone. In the past, he said, Back in the fall, he said Dextenza could be worth $250 million to $750 million. He hasn't said that once since December. The last Fireside, he said Dextenza sales are going to start exploding, which is a bluff because that's only going to make a couple $1 million a quarter, a few $1 million a quarter. It's not enough to fund a $440 million hole. And, there is no other path. So let's say everything he's doing is bullshit. It's all, I don't believe that I don't think he's lying to us at all. Okay. But let's say that he's bluffing the street because he has to portray confidence in the data room because he has to get a deal done and he has no plan B. Okay, that would be the black swan disaster. And I don't believe he could be this far along and not even talk about the do it alone this time if that's the outcome that is even possible to happen. Remember, they only have like 9 months of cash left. 9 months starting June 30th. There will be going concern language in the Q2 10Q, excuse me. Very likely. He could have raised at any point in the last year. In fact, they could have raised in August of last year before they did the 7-month data. Now, yes, the stock has been really impaired since September of last year. And he's on record saying that they're not going to raise money at these levels. Or back then it was like the stock was 3, 4, 5. But there's been no secondary. Could they put the 12-month data out and do a secondary next week? They could. I don't know what that buys them. If they did a secondary next week and they raised $75 million and they raised it at $6, it would dilute the living share of the stock. They'd probably add like 20% dilution, something like that. It's a big secondary. I don't consider that minimally dilutive at all, by the way. But they raised $75 million. And now they have $135 million. Burning $20 million a quarter. And then what? He said that they won't do any path where he's not fully funded till NDA. That would give them a little under 7 quarters of cash. It would fund them just to run their business through 2024. They would be out of cash by the end of 2024. That would not pay for $1 in any of those 3 trial outcomes or options. Well, then what? What's he going to do in conjunction with the secondary? The only thing he could do would be sell Dextenza and bring in $200, $300 million. That wouldn't fund a wet AMD inferiority trial, which he just said that they're going to be in they're likely or hope to be, I don't know what his exact language was, in TKI trials before November of this year, which could only be a non-inferiority wet AMD trial. Glenn makes a good point. He said they have one guy that needs to reply to 5 data requests. That sure sounds like 5 potential partners in the data room. I mean, it's true. It's unlikely it's 5 people from the same company asking the guy the questions. That's interesting. The key to this thesis is not complicated, people. I am not a biotech guy, okay? So when I saw this data, and by the way, I wasn't that enthused with the original data in September. I wasn't even focusing on it too much. What got me interested in this stock was the company's confidence and language in December about not diluting at all and going forward in a non-dilutive manner. That perked my ears. Then I dug in to the wet AMD market and to this TKI, and I looked for any flaw in this data or in this product that could make what seems like a very obvious blockbuster potential product faulty. I'll give you a perfect example. So they have one competitor, iPoint, EYPT. It trades at a negative enterprise value, okay? The market is placing a negative value on their TKI, despite it's further along than Ocular's. It's in phase 2 drug trial right now, okay? The reason why this is, if you speak to anybody about this drug, people believe this drug is a non-starter. It has all sorts of safety implications. Basically, the inserts stick in your eye. They don't dissolve. It's a 0 if you speak to anybody about the drug. And that's the reason why the thing trades at a negative EV, okay? You hear none of that about this TKI. There's no bear side to this, except that people that in the past have said TKIs don't work, or in trying when people have tried TKIs out in other indications with other drugs, it has been spotty and not successful. But as far as this data set goes, you don't hear anything about a safety problem. There was a significant adverse effect on the 7-month data, but that came after the anti-VEGF shot. Now, one analyst said there's only a 1 in 1,000 chance of that happening. So it's something to keep your eye on. I didn't even mean that pun. Can't believe these YouTubes are free. So, what could make this not work? As usual, it comes down to safety. When you test it in hundreds of people, you could find out that the delivery mechanism or the insert or something is causing a major problem to the eye. But this has now been tested in 50 people, and it's been safe. And the underlying drug and the TKI in general, the delivery mechanism, I think, it's been tested in 1 million people. It's the same underlying technology as Dextenza and their whole platform, the hydrogel thing. So again, I don't know anything about this stuff, but I do look for the negative. I read every single tweet back in September and October to see anybody that had negative things to say about that data. The stock went down after that data. And I think the stock went down for 2 reasons. One, the company needed money, and people just expected a huge capital raise that never came. 2, from month 6 to month 7, they had a drop off in effect. It went from like 80% to 71%. And I think people were concerned that the drug would not perform the way it was supposed to perform, which is to last for 9 months or longer. And if everybody needed to be rescued in month 7, then you have to question whether or not these people were getting any benefit from the drug, and they just got the anti-VEGF benefit, and they needed a rescue of anti-VEGF. That brings me to another really important point. When you look at this data, more than 71% of people made it through 7 months. The rescues that happened at that point, if I believe are correct, all the rescues were at the discretion of the investigator. They were not based on protocol. So if you just did it purely by if the score of the eye changes, the visual score changes an X amount, or there's some sort of physical change in the eye from looking at it through whatever the fucking way they look at it, then you give a rescue. The list of the rescue criteria is listed on the deck. More people made it to month 10 than they even announced. I'm going all over the place here. So, but people didn't buy the data, or they didn't care enough about it. I really think that all changed after 10-month data, because the difference between a drug working for 6 months and the drug working for 9 or 10 months is just astronomical. I mean, they already have 4-month drug on the market. And this would be a new paradigm. It's riskier than, just giving someone an anti-VEGF drug. So, the whole thing's nuts. I think what's interesting about Ocular is that this, I think, will prove to be a really good example of not anchoring yourself on a current stock price or a current valuation. It's very easy to see it at 740 and be like, this thing moved from 290. I missed a move. I don't want to buy the 52-week high, whatever. By the way, this isn't me pumping the stock. I can give two shits if any of you buy Ocular Therapeutics. And anybody that knows me, I don't do any of these to get to get people to buy into a stock that trades $7 million a day. Nobody that's listening to this YouTube is going to materially move Ocular Therapeutics in any way, shape, or form. So this is not the reason I discuss it like this. The caveat, as I say on my YouTube, is none of this is investment advice. This is an extremely risky stock. That leads me to another positive thing that just happened. My biggest risk with Ocular, quite frankly, was that the diabetic retinopathy trial was enrolling phase 1 patients. And if there was any risk of a major significant adverse effect after the TKI injection, it could have happened while they were enrolling new patients. And we might have woken up to a clinical hold if something terrible happened with one of those patients, and the stock would go down well over 50%. They just announced they fully enrolled the trial yesterday. If the trial is fully enrolled, everybody, or just about everybody, maybe there's one person left, has gotten their initial TKI shot. There might be a period of time where they have to monitor them for a month before they give them the shot, but likely fully enrolled means the shot has happened for everybody. And there's no follow-up shot. So if something bad were to happen in that injection, we would know about it already. So that was really positive to me, that that's fully enrolled. But anyway, what I was going to say was it's extraordinarily risky, and it could go down. Many things can go wrong here. The obvious being that they can't get a partner, and they do some crazy dilutive capital raise to fund the company. But that aside, if you don't anchor on what the stock's done, and I just tell you that it's a $550 million market cap, something like that now. I don't even know if it's what it is now. It's more because it went up a lot. $600 million market cap. It's like $600 million market cap. If I told you that the NPV of their wet AMD drug right now is $2.5 billion, $3 billion, I mean, because that's the math. I got to a $25 billion valuation in the future, and I gave it a 25% chance of working. Just for the record, most drugs that enter phase 3 have a much higher than a 25% chance of making it to NDA. I don't know what the numbers are, but I've seen them before. It starts out very low in phase 1, goes up in phase 2, obviously. If it enters phase 3, it could be as much as a 50% chance of, eventually being approved. I don't know what the exact number is, but I'm using 25%. Bears will say they ran a small phase 1 trial and they're skipping phase 2 and they're being cowboys. It wasn't treating enough patients. The efficacy could be a fluke. Safety could be an issue because you don't have a large enough safety database. This is what the skeptics will tell you about this. My counter argument is it's been treated in 50 patients, so the safety database is pretty big, and the efficacy signal to me is crystal clear. They first did it in monotherapy in Australia, and that was where they basically had wet eye, and they tried to see if they could turn it dry. And they were able to do it with the dose effect on an inconsistent basis. But they showed the drug was active and working. This time they did it as a maintenance therapy where the eye was already dry, so people were already getting anti-VEGF treatment for a year. And they're clearly showing that people are maintaining their eyesight. This is not just not taking shots because they don't feel they need to. They're testing their eye vision, and they're showing you what the visual acuity is versus the control. And it's better. It's stable versus the anti-VEGF goes like this. because they have to keep getting redosed every 2 months, and it doesn't give them an equal amount of drug the entire time. It's a good drug. So if that's worth today $3 billion NPV, and it's trading at 600 million, you tell me what you think the stock should be worth today and where it will go on a partnership. And that doesn't include the rest of the pipeline. Diabetic retinopathy, Dextenza is worth a few $100 million, and they have a glaucoma readout for a phase 2 trial in Q1 of next year. That could be a multi-billion-dollar drug if that trial reads out correctly. They only went after big markets with what these drugs that they've been trying to treat. Okay. So for me, that's why it remains my biggest position. I sold some the last couple of days because honestly, it was a 50% delta adjusted position. It's now a 40% delta adjusted position. I wrote on Twitter it was a 35%. That was because I was trying to take it down to that, but I stopped selling it because it went down today. And I'm not selling anymore here. So it's a 40% delta adjusted position. I might have to play around with it at OpEx next week because I don't know if I can necessarily exercise all the calls I have, but it will remain about that. I mean, who knows what happens in the next week? But look, I'm comfortable with that risk. I know I can wake up with me losing 20% of my portfolio tomorrow or 25% of my portfolio tomorrow if this goes wrong. This is not the kind of risk tolerance that 99.9% of people should take. I'm not advocating it. I merely just disclose what I do. I've been doing it on Twitter for a decade, and that's just what I do. I just tell people my position sizing. Definitely not advocating for it. I've done some very foolish things over the years. I've had over 100% positions multiple times, and those days are behind me. Though they were just there in the fall of last year with Lionsgate. It was over 100% delta adjusted position. But I will never do that again. The only way I could ever see myself doing that again would be in a extraordinarily low risk arb position, maybe with options where it's delta adjusted at 100%, where I think there's a 99% chance of payday. And I would lose maybe 20. In that scenario, my break would be I lose 20% of my portfolio. But that's just hypothetical. I kind of did that with XM. When XM happened in February, I was probably near 100% delta adjusted position. They want to fund both DR and wet AMD, even more money. Definitely partner out. I mean, the only way you can do any of this stuff is with a partner. They just don't have the money. Is this upcoming 12 months data on Saturday a stock movie event if durability is being demonstrated? Well, it's weird you word it like that because we expect the drug to stop working at 12 months. So for it to be a moving event, we would hope over half of the people need to be rescued by 12 months. So I don't know if it's going to surge on that. The market's weird. I have no idea. But I'm not at all concerned about the stock going down on whatever we find out on Saturday. And I think that once that data is out, it's completely green light central for partnership. I would think almost certainly by the end of July, I own July UpX. I think July UpX should be clear. The company knows more than we know. So yes, we're nervous and we want to get a partner done. But if you're Anthony and you're talking to multiple strategics and they're bidding each other with term sheets, you're not in any specific rush. An extra month or two does not mess up your plans. It makes us angry and anxious. But why would Anthony want to sign the first term sheet he gets that's good? The risk he's taking is something bad happens with the diabetic retinopathy trial from a significant adverse event, and the whole company's doomed. But if they're fully enrolled in that now, the odds of an SAE there are almost zero. So Anthony's not sitting on any active new dosing that can affect the outcome of the company. So anyway, I feel really good about it. And that's it. That was really long. Any other questions? Are you any reason you're still holding AMPY beta as you started? I only own AMPY call spreads. It's about a 5% delta adjusted position. And I think AMPY is going to be at a fork in the road very soon. The company just cannot exist at the size it is. And given it's so delevered now with the insurance proceeds, it's very de-risked. And I think that there is a better chance than not that in the next year, the company is sold. So that is why I am still involved there. It's just cheap. And there's no reason why it should exist. So I think AMPY is a extraordinarily good way to play a view on oil and gas. Could be the best way because you have a very cheap small cap oil and gas producer that they're split 50-50, and you have a natural catalyst of them selling the company versus other oil and gas companies. There's no natural reason for that to happen. This one has had such chaos and is so subscale. It's pretty rare to see a market cap this small in oil and gas land with this kind of overhead. The overhead is it's too much for a company this small. But no, is it my favorite idea? No. You have to want to own oil and gas. And if you want to own oil and gas, then you should put it in AMPY, I think. Oh, I have a new idea. 4140. A little hairy, but I like it. It's Avid, AVID, and it's a little flimsy, but it fits the kinds of things that I like. The long story short in Avid is that it is a producer, manufacturer of very high-end equipment for the film, television, music industry, and it has kind of a cult following, and it competes with things like cheaper products for Apple, Adobe, I think, is a competitor, but they handle the very high-end versions. Company's been a mess for years. Kind of turned itself around a few years ago. Has an activist that's on the board that owns, I think, 15 or 16% of the company. Very, very smart activist. Big fund. They've been there since 2019, so it's not a new activist position, and they know the business well. The company's in the middle of a transition from kind of one-time sales to a subscription business, and they're only halfway through that, so the numbers are very confusing. And once they get to the other side of that, it'll obviously be a much more attractive business with much more easily understanding, recurring revenues. All that's great and all, but why do I like it? So it blew up on earnings last quarter, and the company named a whole bunch of reasons why it did, and I'm comfortable with the reasons they gave. Then 3 weeks later, Reuters came out with an article that just has one author on it, but it was very detailed. It said that Goldman Sachs is soliciting binding bids for Avid, and didn't give you any details about who might buy them. It didn't give a timeline, and no article has come out since corroborating it. Now, the reason why I like the article and I like the idea is this. The stock was 2050 before the article. The stock's 2380 now. So there's only like a 15% premium in it because of this article, because the article is a little flimsy. Came out after the stock blew up. So people might think the company just leaked it to get the stock up. And there's only one author, and it was never corroborated. Oh, there's no price listed, and there's no bidders listed. Okay. My pushback is this. So the stock has been up and down for years, and there's been an activist investor in it for years. And they've never leaked articles saying that they're soliciting bids for the company. Okay. They specifically mentioned Goldman Sachs, So it wasn't a made up article. I'm pretty confident Goldman Sachs is their banker and that they are soliciting bids. Okay. The question you have to ask yourself is, are the largest tech players like Apple and Adobe scared to bid for antitrust reasons? And if they are, can anybody buy them? I think that there's a decent chance that those companies would still take a chance and buy them. It's a $1 billion company. It's not that big of an acquisition. It might not even hit the antitrust regulator radar. But even if they don't, I think it would make a really attractive company for private equity. Because in 3 years or so, you're going to be done with the transition to fully recurring revenue. And you're going to have a very high multiple stock when that happens. And it's a cult-like product, cult-like company that is very differentiated in the market. The question you have to ask yourself is, why leak it? And does a leak signal that they're not close to a deal, or that that they're begging for a deal by leaking it? I think what's not in there is as interesting as what's in there. If Apple or Adobe or somebody like that was interested in the company, they would never leak those names. Someone like Amazon has a rule. If they're leaked in an article being interested in acquiring a company, they instantly walk. And I am convinced and confident that Apple and Adobe have a similar rule. So, what can this sell for? Well, the stock was just $30. And I find it hard to believe the process was initiated in the last 3 weeks. Now, someone sold a very small amount of stock at the end of February. It was only like a few thousand shares. So I also have a hard time believing the process was going on then. So if we assume the process started in April, I think you can get done with the process by July. And I think you can go for $30, $35 a share versus the $23.70 it's trading at. If I'm wrong, the stock market's gone up a lot since then. I listened to their Fireside chats, and I think that the earnings problems they had were transitory. They might have some small headwinds from the writer's strike, but they said that shouldn't be that big of a deal. And I don't think you have a real risk of the stock blowing up again from here. So I think I have a few bucks down. I have 5 to 10 up, and I would say there's an 80% chance it gets sold. So I built a pretty decent sized position now. It's like a 15% delta adjusted position, mostly stock, and I own July 25 calls, which probably are going to be too soon, but you get paid a lot of different ways with that. I mean, if another article comes out with price or bidders, you might get into the money just that way. And it can be done by the 3rd week of July. And I own October 25-30 spreads. What do you think of SP? Is SP share price or is SP a stock? I don't know SP. If that's a stock. Is that the S&P 500 you want me to tell you about? Oh, Cure. That's a great one to talk about. I still own Cure. I made it a little smaller into the data readout. It's a 5% common, and I have on 30 basis points of July 30-40 call spreads. The July 30-40 call spreads in Cure are pretty interesting. I was buying them for $1 to $1.10. You probably have to pay like $1.25 now for them. But at $1.25, you're going to get 8 times your money if the data is a home run. The market's pricing in a $10 move on Cure into the data, which is a huge move. So to get that kind of returns on the call spread were pretty attractive to me. And I only put up, like I said, I think 25 or 30 basis points into it. Cure is very risky. Now that they've licensed out their hemophilia drug and they sold the royalties for it, most of the company's valuation now is on this Huntington's drug. They have a pipeline with a few other drugs that haven't entered the clinic yet. There's no reason to put much valuation in any of those things. So based on what this Huntington's data does, I actually do think the stock could go to 10 or go to 40. I didn't think that before. I do think that now. The good news is I think the odds of it going to 10 are extraordinarily low. I've discussed in the past, but it's very important to know what the company knows. Okay. They have open label EU data that it's open label. They know what the EU data is, both functional and for biometrics. So they have a very good inclination whether or not the drug works from that open label data. But the most interesting reason why I think the drug is working is that there are two major, massive data points that the market is missing. I talked about this in my last or in previous YouTubes. One, they halted high dose enrollment in the EU in July of 2022. And the Data Safety Monitoring Board looked at all data in both trials to look at safety and efficacy to decide whether or not it was ethical to restart high dosing in that trial. In October, maybe September, but it could have been October, doesn't matter, of last year, so 4 months later, the DSMB came to the conclusion it was indeed ethical to redose in that trial. They did that based on looking at safety and efficacy data that they had that's unblinded to them. 2, in the US trial, there's a placebo group, a control group, and they get a sham procedure, a sham surgery. And then a year later, pending DSMB approval, those patients cross over into drug, into procedure. And it's my understanding that those patients have already started getting the procedure, that the Data Safety Monitoring Board has already greenlit that. It is extraordinarily unethical to put those patients through a second surgery for a drug that is not showing signs of efficacy, let alone the fact it had a safety signal. You just have to at me, Kalabi. Your hand. Well, give me your handle now. Just tell me your handle now, and you know what it is on Twitter, right? So I'm not going to say it on here. It's given to tweet. GIVEN, the number 2 tweet. TWEET. I'll accept you, assuming you're not MAGA. So I think those 2 points are just fucking massive. And the real question to me would be, how much efficacy data is there? Is it a little? Is it a lot? And there's 2 different buckets of the efficacy data. There's biometrics and there's functional data. And they've been talking down the functional data. They say 1 year is not enough to have good functional data, though they have 2 years in the low dose cohort. I think the uniQure data is going to shock people. People have been burned by this company the last 2 times they put out Huntington's data because it did not perform as well as people hoped it would. But now the stock's 20, not 30, and you're much further along in this R&D. And the beauty of it is they raised all this money now. They have like $700 million, so you wouldn't even expect them to dilute you after they get this data. So honestly, I think I could be bigger in it than 5% common and those call spreads. But the call spreads are so sexy that I think if it went to 40, I would make another 350 basis points or something. So I would make 500 basis points in the common, 350 basis points in the options. I'd make 850 basis points, which is really fucking great. And it's worth a lot more than 40 if the Huntington's works. Do you think there's a future they don't hit stat stigs, but they show some clinical benefit? Well, this is not the readout. This is not some final readout. I mean, just to be clear, there's no endpoint here. There's no 3-year endpoint, 5-year endpoint. This is a phase 1, phase 2 trial. So it's really going to be very interesting how they present the data and how the future data looks. But to answer your question, if there's clear evidence that the drug is efficacious in a year from now, I absolutely think they would file for AA. I mean, this is a debilitating, terrible disease. Now, this procedure is a real bitch. So you'll have to show clear evidence of efficacy. But if you can do it through a biomarker supported by some functional data, maybe it's a year from now. I think that they have a good case to make that they could file for AA, because a phase 3 trial here would take just years and years and years. And this is a really debilitating disease. So it's going to be really interesting how they handle it. And you have an FDA that shows they'll basically approve any neuro drug, for a debilitating disease. So, and there's no Huntington's drugs on the market. So let's see what happens. I don't know if this data will have it, and the company's downplaying it. Probably have to wait another year to see what the next data set is. 2-year data for the high cohort. Stock price for Ocular. Do you want to know where I think it's going to go? You have to tell me what, the partnership's going to say. But it wouldn't surprise me in the least if the stock went to $15. I mean, they should, if they're doing this right, get at least $200 or $300 million upfront and share significantly in the profitability of the future revenues and profits, of the wet AMD drug. If they get those two things, you'll be sitting here with the company with $400 million in cash, fully funded for the rest of their pipeline, a wet AMD trial fully funded, and the potential to own either double-digit royalties. Let's just do double-digit royalties. If you think this is going to be a $5 billion drug, you tell me what $750 million a year in cash flow is worth. 10x? That's $7.5 billion. You discount that back, you put a 25% chance on it, that's 1.5, well, that's 1.75, 2 billion, what is it? 1.75 billion? 1.875 billion. And you discount it in half, 50%. It's a little under $1 billion NPV. Plus you have $300 million of cash. Plus you have diabetic retinopathy. Plus you have probably $1 to $3 billion in milestone payments that I'm not even counting on. There'll be tons of milestone payments. Yeah, much, much higher. Much, much higher. All right. This was long. This was fun. You'll hear from me again. I might do a YouTube this weekend after the 12-month data. I can't do it on Saturday night because I'm going out with my wife, but I might be able to do it on Sunday. I'll wait to see what happens. If there's a partner in real fireworks, I'll definitely do it on Sunday before the market opens on Monday. But if not, I might wait until Monday after the conference call. Thanks, everybody. Have a great day. Have a great weekend. Let's make some money. Take care.